Well, in the words of Forrest Gump, life is like a box of chocolates. Well, and you never know what you're going to get. That pretty much sums up what happened in May of 2023 in the stock market and the financial markets. There was a lot of doom and gloom that seemed to be taking place at the end of April with all the issues that we were having, banks going down, rates going up, et cetera, et cetera. And by the end of the month, though, there seemed to be a lot of euphoria that was setting in. Well, this is Steve Wolf, and today is June 6th, 2023, and I'm here with the recap of what happened in May. The debt ceiling, artificial intelligence, the Fed, and bank stocks were high on the list of issues in May. With the Fed relentlessly raising rates for the past year, as we've talked about many times, the regional banks were faltering, and many were concerned that the government was not going to come to a deal on the debt crisis. Those really were the highlights of the month as far as some of the issues that were going down. So May saw most of the indices down because of that. But one of the things that was slightly up, but really was flat, was the S&P 500. It was up 0.25%. But if you look at some of the other indices, the Dow Jones was down about 3.5%. The S&P Mid-Cap 400 was down about 3.3%. The Russell 2000 was down about 1.1%. The emerging market index was down by about 2.7%. And the established global markets were down by about 3.7%. The only part of the market that really did well was technology. They were flying. In May, the NASDAQ 100 was up in 1 month about 7.6%. And that meant that the NASDAQ was up by about 31% for the year. Now, I think that this caused the Fear and Greed Index to rise a little bit more into the greed territory. I know we do this every month. We look at this Fear and Greed Index that's done by CNN Business, and we're now at 65. A reading of 65 puts us clearly into the greed category. So let's talk about some of the issues that were concerning in the month of May. First, of course, the Fed started hinting that they might stop raising interest rates. As it waits to see if the economy is going to slow down, I think that's what will determine it. We'll see what happens in June when they're scheduled to raise rates, but it looks like they're going to pause, or as I have heard, they said they're going to skip this one. Well, that kind of put a floor on what was going on with the regional banks as far as defaulting because of higher interest rates. And by the way, before we talk a little bit about the debt ceiling and artificial intelligence, better known as AI, I want you to know that what I'm about to say is strictly for informational purposes only and is not meant to be a recommendation. Before you buy or sell anything related to anything I'm saying about the markets or individual securities, be sure to consult your financial advisor to ensure that it's the best recommendation for your personal situation. And by the way, one more announcement before we get back to our regularly scheduled program. Our following is really growing now, and thank you very much for that. But for those of you who haven't done so, please like us, subscribe to our channel, share this with your friends, and we would certainly appreciate that. All right, the default. As I said in last month's recap, even our governmental representatives weren't dumb enough to let the government default on its obligations. The White House and the Republican leadership came up with a compromise. Not everybody was really happy with it, but I guess when they voted on it, they figured that the compromise was better than the government defaulting. I'm going to talk a little bit more about the debt in a few more minutes. So for right now, let's move on to the economy. In an article by the Atlantic Union Bank, it said that the U.S. economic growth had slowed down to about 1.1%. at an annual rate in the first quarter of 2023, and that's down from about 2.6% in the quarter prior to that. Now, here's a chart of the Consumer Price Index from the U.S. Bureau of Labor Statistics, and you can clearly see that from 2021 to mid-2022, the CPI, a measure of inflation, clearly spiked. In the last few months, the CPI has fallen quite a bit, which is one of the reasons the Fed is possibly going to pause before it raises rates even higher than it has been. Now, the Atlantic Union Bank article also states that the consumer goods sector has already corrected, and equipment spending should remain fairly weak. And the CPI, while coming down, is still relatively high at about a 4.5% mark. Now, if you take a look at the Institute of Supply Management, ISM Purchasing Managers Index, you can see that again, since mid-2022, things have definitely slowed down. Now, this chart ranges from 30 on the low side to 70 on the high side, with 50 right in the middle. Anything above 50 means we're expanding. Anything below 50 means we're contracting. In this particular case, we're at 47, which means that we're still contracting. So things are still slowing down. Now, another sign of a slowdown in the economy is the GDP chart, which shows that our gross domestic product, GDP, is down from where we were in the last couple of quarters, and significantly down from where we were over the last couple of years. Now, adding on to what looks like a slowing economy are the banking issues we've experienced. We've talked ad nauseum about that, especially last month in this particular program. The belief is that regional banks are pulling back on credit, and if so, this is, of course, going to add to a slowdown even more. When you add all these things together, it's no wonder that the bond chart is inverted again. Okay, and of course, an inverted bond chart means that yield curve means that, generally speaking, there's going to be recession. It also means that the shorter-term maturities have higher interest rates that you're getting versus the longer-term maturities, which is the opposite of what's normal. So, still predicting a recession. Now, all these are reasons, according to the Atlantic Union Bank, that maybe the hike that the Fed did in May will be the last one. Maybe it'll be the last one for a while. We'll wait and see. By the way, everyone surrounding the economy has been talking about a recession for quite a while. Now, we talk about a recession like this is the worst thing in the world, like it's worse than the Chicago Cubs blowing a huge lead in the summer of 1969 to the New York Mets. Now, that was the worst thing in the world. This, in comparison, not a big deal. Only kidding. But be that as it may, recession is actually usually a good thing. We have expansions and contractions in our economy. And what this actually does, it resets an overheating economy and allows the bond market and the stock market to get back to what are more normal prices, and then it sets the way for the next bull market. So I actually think of it as a good thing. It's normal. It happens. And I don't think it's something that we should be terribly worried about. Of course, nobody likes to see their monthly statements go down in value. I certainly don't. No one does. But it is a normal part of the economy, so don't be surprised. If that happens, if we do have a recession, don't be surprised if you see some lower values, not only in the stock market, but real estate. Most everything will slow down. So, as I've said previously, if we're going into a recession, and that's still not a certainty, I would think it would come in over the next couple of quarters or so. That would also mean that at some point over the next year, that interest rates will start coming down. And it's one of the reasons that the tech stocks have gone flying upward this year. It's the anticipation of the rates coming down because, generally speaking, tech stocks do better when rates are lower. Of course, the tech stocks flying higher has a lot to do, with the AI revolution that's upon us, the artificial intelligence. And after a couple of words about the debt, I'm going to get back to talking about a little bit about AI. Look, we now have a national debt that's $31.4 trillion. That's approximately $93,000 per every person that's alive in the U.S. today. Obviously, this is becoming a bigger and bigger problem, and the interest alone on the debt right now is approximately $475 billion. $475 billion. And that's approximately about 8% of the budget, according to CNN Business. So that's a big number, and as interest rates go higher and as we borrow more money, that number is going to get bigger and bigger. Somewhere along the line, we're going to have to actually reduce that debt. So right now we're pushing that can down the road. I'm glad we didn't go into default, but sooner or later we're going to have to look at that problem. Now, in the not too distant future, I'm going to have another podcast, and we're going to go over in detail what's going on with the deficit and really what goes into it, what comes out of it. I think it's something you don't want to miss, and we'll let you know when that's going to happen. But for now, let's move on to talk about what everyone's got on their mind, and that's AI, artificial intelligence. Now, the Oxford Dictionary defines artificial intelligence as the theory and development of computer systems able to perform tasks that normally require human intelligence, such as visual perception, speech recognition, decision making, and translation between languages. So, artificial intelligence has really been around now for quite some time. I mean, think about it. When you type on your cell phone when you're texting somebody and you see the words that come up to either give you the ending to what they think you're writing or the next word, that's artificial intelligence. It's anticipating what you're going to do. And how about cars that park themselves? The parallel parking that everyone hated to do. Now it does it itself. Well, that's artificial intelligence. And I know there are a lot of people who enjoy that. I know my wife hated parallel parking. So with artificial intelligence, now she can sit back and smile and do it herself. Anyway, and what about Siri and Alexa? Hey, Siri, what's the weather going to be like today? And she answers you. She tells you what the forecast is. Or Alexa, play the top hits of the Beatles over the last 80 years, and she plays the top hits of the Beatles. I mean, that's pretty impressive. Or how about, here's another one. How about the robot vacuums? What they're able to do is they're able to kind of see the room, avoid the things they should avoid, etc. That is all artificial intelligence. And something probably most of us have done if you've done any buying online. You see these chat bots. They come on maybe at the lower right, lower left and say, is there something I can do to help you? And although sometimes they're not as helpful as we'd like, I think that intelligence is going to get bigger and bigger. So why all of a sudden has artificial intelligence become, this huge thing? And it is huge. Well, basically it's one word, and that's Chat GPT. Now, what is Chat GPT? Well, I looked up, and ZDNet says that Chat GPT is a natural language processing tool driven by AI, artificial intelligence technology, that allows you to have human-like conversations and much more with the chatbot. The language model can answer questions and assist you with tasks such as composing emails, essays, and code. Now, ChatGPT was created by OpenAI, an AI and research company. The company launched ChatGPT in November of 2022, not very long ago. So how big a deal is ChatGPT? I'm telling you, it is a big deal. Think internet-level disruption. ChatGPT is scary good. We're not too far from dangerously strong AI, said Elon Musk, who was one of the founders of OpenAI. According to analysis by Swiss bank UBS, ChatGPT is the fastest growing app of all time. The analysis estimates that ChatGPT had 100 million users after just 2 months after it launched. For comparison, it took TikTok 9 months to get to 100 million users. And by the way, for all you parents out there that have children, don't be surprised if they cheat by using ChatGPT to do some of their homework. Hey, I'm just saying, might happen. So when NVIDIA, the chip company that is now dominating the AI universe, released its astronomically good earnings report in May, it set off a firestorm of investing in anything and everything that is AI, artificial intelligence. Think of NVIDIA as the picks and shovels of the old gold miners. They're the ones giving you the supplies to do the mining. Now, just remember, NVIDIA may or may not continue to skyrocket. I don't know. Past performance, of course, is not a guarantee of future performance. And before you go out and buy it, make sure you talk to your advisor and make sure it's the right thing for you. And by the way, I plan on having another podcast in the not too distant future discussing AI and its implications on the market and perhaps humankind. And I'm telling you, you will absolutely want to listen in on that. There's a lot going on with AI, artificial intelligence, and we're going to try to get into some of those issues. In the meantime, suffice it to say, it's a big deal, and it's caused tech to crush the other indices in the market. And actually, it actually carried the market this year. So with everything we've talked about, it's a curious time in the market and the economy, and there are many signs pointing to recession, but so far that hasn't happened. Let's face it, we've been talking about a possible recession for a while. Hasn't happened yet. Again, maybe the next couple quarters. If it doesn't happen then, I'm not so sure that we're going to even get a recession. We'll wait and see. Maybe we'll get more clues in June. So join me in the beginning of July, and we'll talk about what happened in June. Until then, happy investing, everyone.